Hi, this is Mac with PriceActionTradingSystem.com, and I'm going to show you a trade example today and talk about a few other things. But there's a couple of really good things about this trade that I want to show you today. First of all, I want to show you what happens on a trade that you enter that doesn't do exactly what you expect it's going to do. And I'll go over all that. I'm actually not going to play this whole trade out because it was a very long trade that we drug out for quite a while. With prices just kind of getting stuck and overlapping and not really going anywhere. So we didn't get stopped out, but we didn't reach our target. So I'm not going to play the whole trade out. I'm going to skip through it because then I want to go back to the chart for today to show you some other things. So I'm not going to let this whole trade play out, and I'm going to tell you how I entered here. The entry was actually one tick above this green bullish bar right here, this inside bar. And so the entry would have been right here, but it triggered before I could get everything going. So I just dropped a limit order in there, and it did pull back and fill me. And that happened before I could get the recorder going. So I missed the part about getting filled there. But I'm going to go ahead and start the trade. Actually, before I do that, I'm going to tell you exactly why I entered this trade here. And as you can see, the prices are making an uptrend. And look what we have here. We have one leg back, a pull back, and another measured leg down. And if you measure this first leg, this second one's a perfect measured move down. We had this one little tick trap here, and then prices reversed and went higher. So we had a short trap down here at this low as well. And what I was expecting to happen, if you look at this line here, that is a measurement of this leg over here. Then we have this correction. And then so I was expecting this leg to be the same distance. So I was looking for prices to come all the way up to here. Here's the high of the day, this green bar, and I was expecting that prices would at least test that high of the day. And even though our trade works out short term here, prices didn't do any of this. And it turns out that this is one leg down, and we have a two-legged correction, and then another leg down, and after that prices continued to sell off, and they sold off in a big way today. So first of all, the first thing I want to show you is how we entered this trade and why I took this trade, which is the reasons I just explained. And we were looking for a target for prices to come all the way up here to around 12.59, I think was my original target. But that doesn't happen. But later I want to show you the clues of how we knew that wasn't going to happen and how we knew the market was turning over, and how if you hadn't already exited the trade, you definitely should have been exiting, and you probably should have been looking for a short at the same time. So even though the market structure is all correct for the upside right now, we actually do have one small clue that prices could be turning over here, but it's not a very big one, and this would be erased if prices did continue to go higher. But we did break below the EMA here, so we've got some bearishness. Normally the best trades will bounce off the EMA. So the fact that we got below it and had this big bearish move down here was one tiny clue that prices may not be going high, but at all the same time, it was not enough to keep me from thinking we could get a scalp out of this trade. And even if you'd have waited up here to enter, you still would be able to scalp out of this because prices ought to come all the way back up here and test this high, this swing high right here. So there was plenty of room to get out regardless of where you entered on this trade down here. But this trap made me really like this after two legs down and the fact that I was looking for a target up here. But let's go ahead and start this trade, watch it play out. Again, what I did was I didn't get everything going in time, so I just dropped my order in on a limit order and got long right here at 12.53.50. We're trading 10 contracts. We're going to try to scalp out with 8 of them right here. And then my intention was to show you how you might use 2 of the original 8 contracts for your stop and give a trade a bigger stop rather than going to break even or break even plus 1. All right, you see that. We are out of this trade. We got our scalp on 8 contracts. And what I'm going to do is I'm going to risk 2 of my contracts that I just made money on for a stop here in an effort to see if prices won't break higher and come all the way up here to our target. And I'll move my target here shortly as well. You can see I'm going to go ahead and move it up there. But what I was going to do is put it one tick below the previous high up here, because I know we'll get resistance there even if prices make it. Even though they may tick through, there's a good chance they'll reach exactly to that point and have a big sell-off. And I don't want to get greedy because you see we entered at 12.53. If we get to 12.58.50, that's 5 points on 2 runners. So there's another 10 points to add to the 8 we've already made. And it turns out to be a really, really big day. Unfortunately, that doesn't happen. The market changes directions here. But I'm going to show you later a lot of clues that led us to see that. As you can see already, prices are just not rocketing off like you would expect if we were going to come back and test this high. But there's always a chance that we get a little pullback or a trap and then go higher. So until we get 2 clear legs in this direction, we don't really know that the sell-off is coming. And you'll see prices continue to work up here. But let's skip through this trade some because it does get very long. You can see that prices are still working up. There we go. I'm moving forward. I'm just kind of slipping forward in this trade just so it doesn't drag out forever. And you can see, okay, we moved forward. We had that little bearish inside bar. It's really a doji. And when prices broke below it, the only reason I didn't already put my stop up there was because I was really wanting to show you how you could give it more room here. And but if prices come back down here too close to where we originally entered, that's not a good sign. So that's one of the reasons why I didn't exit. And here's another thing I wanted to show you. As you can see, look how bullish this bar is looking right here. This is a good example of why we don't sneak into a trade early, because this bar ends up closing back down here and it never ticks higher. So this is just a good example I thought I would show you of why you don't sneak into a trade early, because you can get fooled. And this bar could come down here and look very bullish or bearish and close bullish, or vice versa. It happens all the time. And so I'm always preaching to my traders, don't try to sneak in early because you will get fooled. And but let's go forward a little bit. At some point here, I decided that this just doesn't look right. Prices are not doing what I thought, and I end up tightening my stop. I believe when this bearish bar ends, I decide to exit, and I think we end up making a tick or two off of the runners. But regardless, we've already made. Excuse me, this cough is still killing me. But regardless, we've already made 8 points on the original trade, and when we get stopped out here, I think we make another point off this. I think we end up making 9 points off of this trade. You see, I'm going to go ahead and tighten this stop right here. Actually, we're going to make 8.5 points because I end up just giving it original. You see, we got stopped out. So I'm going to stop that trade right there. And now I want to go over to the regular chart, and I'm going to show you how this ended up playing out. Again, there's the trend, there's the move down, the 2 legs down. This is where we went long, right in here. But look what happened here. We had a swing high right here. Prices came up, tested that, pulled back, came back and tested it again, and could not go any higher, and made a double top and turned back down. Remember our rule that we're always talking about. Whenever the market attempts something twice and fails, it's likely to succeed in going in the other direction. So when prices turn back down here, look what that is. That's a 2-legged pull back to the EMA. You got a nice bearish bar to go short below. Plenty of room to scalp out before here. But the odds were then that we were probably coming back to this trend line, and it was probably going to make at least a measured move. That meant these first 2 swings were probably 1 leg. And if you look at that and you measure that, let's see how close this was to a measured leg. And you see it's very, very close to another measured leg down. That's basically what we got, was 2 measured legs. And then look what happened. 2 legs back to the EMA and another second entry short, and that got you into the waterfall that sold off. But not only that, there was another clue. This trend line coming up through here, right here, we broke below it, We pulled back, tested it once, pulled back and tested it twice. So after breaking below that trend line, we tested it twice and couldn't get above it. There's 2 tries, there's 2 attempts to do something that failed, and look at what happened, a watershed sell-off here. And if you caught any of this, if you entered anywhere in here, even if you waited till this breakout pullback short to enter, figuring that we're at least going to test this trend line now, still your runner survived. And if your runner survived entering at either place there, look at the, I mean, that's a great sell-off, and you can make more money. And right there, that's the sell-off of the week, probably. That's the trade of the week. And I didn't catch any of it, unfortunately, because I was done by then, and I was working on this chart lesson and so forth. So I didn't want I was done for the day. I wasn't going to enter anymore. I wish I would have caught some of that, but I still had a nice day, and I'm not going to complain. But just going back to our original trade up here, that is a good example that the market was not going to go higher, and that we may have made a high, but at the very least we were coming back to this trend line, and you can see there was no reason to go long there. We did have a little bar that bounced off of it, but no break above it. Then we went lower. By the time we got a break above this bar, it was all overlapping in here, and by the time we broke higher here, we were still well below the EMA, had a lot of sell-off. We were below our trend line. Just no reason to be going long in there. And as you can see, prices turned down. Nice 2-legged pullback, second entry short right there. But I don't know that I would have went short right below that bar or not, because it was bullish. But we did have a double top there. We did kind of break higher here and fail. So there's some other reasons to consider short. I definitely would have went short right here if I didn't risk the entry right here. But again, this is a great example of a trade of what we thought the market was going to do. And at the time we entered, the market was still in an uptrend, still making higher highs and higher lows for the most part. But this is where the market structure changed. This was the key right here. So make sure, if you didn't catch what we're talking about here, that we tested this high twice and made a double top. Again, the rule is anytime the market attempts something twice and fails, it's likely to succeed in doing just the opposite and going much further. And that's why double tops work so well. That's why double bottoms work so well. Look here, we had a low. We tested it once. We tested it twice. Prices couldn't get lower. What happened? Boom, you got a big buying spree right there. So pay attention to that. Make sure you're aware of those things. And again, this was a great example of how the market doesn't always do exactly what we expect it to do. But if you know how to read the price action and you understand what's going on the chart, you don't necessarily get fooled. The hard part is switching gears in the middle of a trade, but that's what you have to learn to do. And this trade was a good example of we didn't even get it right, but by using the strategy we used, we still made over $400. And of course, we traded a lot of contracts to do that, but that's also a great example of the fact that you don't have to even make a lot of points in this business if you can just make a point or two every day. And don't take that the wrong way, because somebody questioned me the other day, and I think they got the impression that I was saying you only had to make a point or two every day. Well, you only have to make money, but I'm not saying that that's all you should be shooting for and to start trading 40 contracts every time you enter. Don't take that the wrong way. What I'm just trying to indicate to you or point out is that the way to make more money is once you learn to make 4 or 5 or 6 or 8 or 10 points a day, is don't start trying to make more points, just increase the number of contracts without over leveraging your account, because that is very key. Do not over leverage your account. And because if you can make 1 point a day on one contract, that's $50 a day. If you can do that every day for a month or two, 6 months, then you've proven you can make a point a day if you can do that for 6 months. And so for the next 6 months, you trade 2 contracts and you make $100 a day on 1 point. And then maybe in the next 6 months, you trade 4 contracts. Then you're making $200 a day on making a single point every day. So that's the kind of thing I'm talking about when I'm talking about you don't have to make a lot of points, or you don't have to start making more points to make a lot of money. But at the same time, don't get ahead of yourself. Don't over leverage your account, because when you start seeing a tick going against you and that single tick's costing you a couple of $100, and you suddenly got 4 ticks against you, it's hard to keep your wits about you and do the right thing. So don't over leverage yourself. Don't try to trade too many contracts at one time, that type of thing. And don't take what I say sometimes and try to turn it into something different. And I know that there's always two sides to every coin. So sometimes you're not intentionally trying to turn something I say into something else. You just misunderstand. So that's really all I'm doing is going back and clarifying that point. But I'm going to call it a day to keep this lesson from getting too long. This is Mac with PriceActionTradingSystem.com, and hopefully you learned something today and saw how to determine when the market's turning over, and not only that, but also how you can actually get it wrong and using the strategy we use and still make money. So again, this is Mac with PriceActionTradingSystem.com, and thanks for listening.